The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling a problem with us out here. We have the Dow Industrials up 85, NASDAQ up 36, S&P's up 7. Gold contract, it's actually not down $24. It was trading down there yesterday. We're at 16.52. You get silver trading 18.32. Light sweet crude off 28 cents, $51.15 a barrel. Notes and bonds, folks, continue to be the story, okay? 10-year up 8 ticks, 132.29. 30-year up a half a point or 16 ticks, 167.07 in King Dollar. King Dollar down 77 ticks, trading 99.282. Euros at 108. The yen is at 110.5, and the pound is at 129 to 1 U.S. dollar. And notes and bonds, man.
Cool. I think the 10-year was sitting right at 1.35% as I did that 10 o'clock update.
Pretty amazing.
Not too shabby.
You gotta love it.
Yes.
Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time. You want to understand the option market. You want to understand option strategies, defined risk, in quotes.
Would that be an okay strategy right now? In
quotes. The future market. Check it out, folks. If you haven't test-driven yet the Thinkorswim platform, guess what? It's an awesome platform. It held up unbelievably yesterday, okay? Which is in heavy markets is really important to understand where the bids are, where the offers are. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. You know, yesterday was one of those days where everyone, patience, I think, was rewarded yesterday. And understanding that, waiting till a market makes a move and seeing what a market does, because what we do when we get to the end of a trading week, right? There's always that risk between Friday and Monday.
Yes.
That some announcement will come out, and you saw that live play out right in front of your eyes as the news out of Italy, was frankly a surprise, as the news in China seems like it's starting to, lose some of its strength. The pace in China seems to be slowing, but a lot of people did not see Italy.
Oh, yeah, you start closing down Venice and northern Italy.
I think they went from 3 to 260 over the weekend. It's like.
And each time that happens, remember, Europe is much closer to the United States.
Yeah.
And now plane, air traffic going back and forth is going to be affected. And that's a much bigger story. That being said, this market is doing its best to absorb that hit yesterday and consolidate here today. So it's going to be an interesting day to watch. I mean, they did a lot of damage to the futures overnight on Sunday and early morning Monday. Let's see what the rest of the day holds out here, because this might be a good day for nibbling if we get any sell-off midday or the second half of the day. But, these are – the VIX is telling you that this is at least a little bit real.
Yes. Well, I think one of the things, markets, unfortunately, pay attention and don't pay attention until they do, right?
Sure.
And I'm going to go from like a technical perspective to a fundamental perspective. The supply chain is broken, man. I think people really have to understand that. That's a big deal. And now it might be a 2 or 3 month broken supply chain. Because we'll get over this, okay? But that's a big deal, because the amount of cash flow for these companies, if this happened in the United States, picture, how do you stay alive for a month and a half without cash flow, right? For your workers and for making other pieces. So, I think that part is not talked about enough. Do you know what I mean? Because it's gonna come. It's going to come at us, you know what I mean? So
it's hard for people in the United States and trade in the United States markets to measure this.
Yes.
Right? Because still, let's put it in real terms. This is still, at least in the United States, less risky than the common cold and flu season.
Sure.
Right? There's a lot more cases of regular flu than the coronavirus. But the uncertainty that it has put on these markets is what's really taken a toll here for the last 24, 36 hours.
Sure.
So we need that. We need that uncertainty that's that word we use all the time with these markets. We need that to become less uncertain or closer to certain.
Yes.
For these markets to start stabilizing and move back north.
And that's a cash flow, right? That's what it comes out.
Yeah.
Now let's talk option strategies, man, because this is when guess what? Many times, folks, let's just, look at the Amazons of the world. And, we have so many high-priced stocks out here that inside the option market, folks, you don't have to put up $2,000 for a share of Amazon.
Sure.
Right. If you watched yesterday's show, the trade that we put on in Home Depot worked out perfectly because what we did was we did an iron condor, a range-bound strategy, but we gave it a bullish tilt.
Okay.
Right?
Sweet.
Where we brought the short put a little closer to at the money, and we gave the short call a little more room on the upside.
Nice.
Because of the sell-off yesterday. And if you think about it, Home Depot is the beneficiary of a pretty strong housing market.
Yeah.
If that didn't feed into Home Depot, then there was a bigger issue there. And Lowe's, which is coming out tomorrow morning, it should be a very similar story coming out of Lowe's.
Yeah. It's cool, Kevin, right? So check this out. So picture that I absolutely agree with you, what you're saying. The problem is going to be for both of them is like 3 months from now because of the supply chain also coming in from China. And I can tell you personally, okay, we build a lot of houses. What I had to do, and I did it really quickly, I bought a lighting 2 weeks ago for 3 houses, and I normally wouldn't have had to get it for another 3 or 4 months.
Sure.
I bought a whole container of fencing. But my take is that like 3 months from now, because of the fact, the factory's closed, but that wasn't the biggest thing, folks. What happened is that the container port's closed also. So you get a 6-week lag. So the real question is going to be, the cool thing is that because of Lunar New Year, the Home Depots and Lowe's of the world stocked up anyway. But my take is that it's going to be the next quarter where we're going to have to be careful on those equities. Do you know what I'm saying? Where it's going to go.
Yeah,
so.
and these effects, they'll linger for a little while, right?
Yeah.
It'll take a while, even if and when this coronavirus becomes a temporary situation. And I do believe long term it will be seen as temporary. It's still going to leave a mark, right? And it's still going to, things have to be restarted up. They're all stopping. They have to be restarted. That's going to take some time, and it's going to. So I think the big picture, I think yesterday was this market putting back in the risk premium that had kind of dissipated in the weeks past, because this is clearly not going to be a short-term thing. It's going to be much longer. And I think this market needed the risk premium that, in terms of the VIX, in terms of gold, all those things, they needed risk premium put back in, because this market is by no stretch of the imagination in the clear here.
Sure.
Yeah.
And folks, this is what's so cool about options, okay? Because if you want to dip your foot in, well, guess what? You can do it with options without basically, the defined risk. You're not going to wake up Monday morning and,
It's past your stop.
It's a heavy deal, man. 45 minutes right from now, folks. Kevin, you have a great one, safe one. Of course, we look forward to the show.
Thanks for having me on, guys.
You too, Kevin.
Thanks,
man.
Stay right there, folks. Tommy and I come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 5, Nasdaq's up 4, S&Ps are off 4.
What happened to the rebound and the bounce off of yesterday's low? S&P is negative by 4 points.
Yeah.
The Dow actually negative by a point right now.
And this isn't gone away quick, man.
No.
This is a little different ball game here.
It sure is, man. And that's what I mean. I think things are even updated. Just to jump before we get into consumer confidence, I think the number I did the morning market kickoff this morning, I think it was 260 people in Italy. Friday morning they were saying 3. And so that's where I think, you said, whoa, what? How many people are in Europe, land country?
Right.
You got a European passport. You can go wherever you want to go in Europe. And that's a scary notion from 3 to 260 over the weekend. That was a lot of yesterday with Europe.
Yeah.
The impact. You don't need to be a market technician. It's not a music, but you don't need to be too brilliant to understand the potential with that type of
heads up for people in general. Do you know what I mean?
Yeah.
Because China, you get across the water. Right. Now it's in Italy. Right.
Correct.
It's like, okay,
Italy,
and everyone
Florence,
loves,
Venice. Right. That's it. I just, just the imagery of such beautiful European cities. But consumer confidence. This number out at 10 o'clock a.m. That number coming in at 130.7 from a downer. Is that right? Yeah. Edged up to the best level in 6 months. Conference board's reading increased to 130.7 from a downwardly revised 130.4 in January. Now, I think I saw, let me jump back because I believe the expectations, it's amazing how things can get, we have it up here, consumer confidence. We'll try and find it because I think the expectation was 132 something.
Okay.
Yeah. So maybe even a slight miss, that number, but not too much of an effect so far on the markets. How about we'll jump to home prices? You see this one? I covered it a bit. Oh, well, you're going to like it. Tampa, up there near the top. Home prices in 20 U.S. cities advanced in December by the most in nearly a year on the heels of stronger demand, lean inventory, S&P CoreLogic Case-Shiller Index. Property values increased 2.9% from the same month the previous year. Data released Tuesday showed biggest annual advance since January of 2019, basically in line with forecasts. And do they get into, so prices in all 20 cities increased in the year through December, led by Phoenix, Charlotte, North Carolina, and Tampa.
Florida.
And they had the numbers. Let me pull it up.
Oh,
So
did
it's
they?
a good
Cool.
segue.
That's what I was looking for.
And I put them in the morning market report
good.
this morning. Let's see if we, that's last night. So we'll just go to the front page of TFNN.com. Tampa, I believe it's 5.6%, 5.8.
Yeah, that would make sense.
For the year. Let's get into the numbers. So home prices in Phoenix, 6.5%, Charlotte, 5.3%, Tampa, 5.2%. 12 of the 20 cities saw bigger price increases in the year, December 2019, excuse me, compared to November's annual read, as in accelerating a little bit. And every city in the 20-city comp saw a gain in home values. Every city. Chicago and New York, the smallest, with 1%. And not bad, New York, 1%, right? When you think about the headwinds they're facing.
The big time. And this is when you count all housing too. That's
sure.
You know, I mean, so that's a lot.
Yeah.
And you know, the bottom line is that what we're going to see is that as these rates go down, guess what? It puts more strength inside of the, you know.
So I had an article up. We'll jump to this one. And there it is. So coronavirus fears mortgage rates plunged to 8-year low. So this is pretty cool, right? 3.34% is the average rate. Now that's a borrower with strong financials and credit scores. We have a COO at Mortgage Daily News, some industry insider. Aggressive lenders, they're going to be coming at about 3.25%.
Okay.
And 3.37 will be the new going rate for your average lender.
Where do I have Bud on? We get the Tiger mortgage update.
Fridays at 3:15, right?
Every Friday at 3:15, folks. Bud's
He'll have something to talk about. He had something to talk about last week.
Seriously.
And I said I did my show at 8:30 on yesterday morning, and you guys will replay the first half hour of your show Friday, and it was so interesting because of the big move in rates yesterday. But yeah, you can imagine where, I mean, we were talking about just yesterday, right? If you ever got to move down to 0% the 10-year, you'd probably go to like 1.75%.
Yeah.
And that would be the difference of buying either a $200,000 house. You'd be paying about, I think it was $900 a month in payments, and all of a sudden you can afford a $250,000 house. For that same comparison, if you're buying a $500,000 house,
6 1/4.
same payment, 6 1/4. That's a big move.
It is.
But you can see how basically the same monthly payment could afford you a $500,000 house at the current rates. And if you ever got to move to 0%, which is a big move, it is. But you're talking about 625. You get another 0.5%. You might be talking about even 525, 550. All of a sudden, those houses are worth 5 or 10% more to the same income.
And what normally happens when that does happen, folks, is that the owner of the house, let's say, that would kick in equity, and then the buyer of the house, then that kicks in less money. You know what I mean? So let's say we get the spread of 125. I don't know what the exact number is. Okay. It fluctuate. But like, if you own the house, then you'd kick in, let's say, another 40, 50 grand in equity that you get for your house. I'd kick in another 40 or 50 grand that it's cheaper.
Sure.
You know what I mean? It's just on one side. But it's pretty cool. I mean, if you have a hard asset, it's pretty cool because it's an immediate deal.
Yes.
You know what I mean? The lower end here will really explode because there's still plenty of folks, because houses are so expensive, that someone that could afford a $150,000 house, now they can afford something that's on the market like at 175,
180 even,
which is a big deal. And look at this. We're going right after this 1.31.
Yeah, things went quick, man. We started the show 1.35 when we sat down at 10:06, 18 minutes ago. We're now at 1.335, all-time low, 1.318, I believe. 318, just a hair under that 1.32. Man, that was a fast move. We're going to have to pull up those bonds because look at that drop at the lows,
They don't kid around. So, I'm not going to get into
that drop
I'm not going to get into it today, but I got to study this a little bit more. In fact, we both can study it. I was reading this article last night, and now this is a little complicated, so we'll get into it later. But and what it has to do with, folks, is that all these big bond owners, right?
Okay.
They put hedges. Well, actually, it's not the bond owners; it's the mortgage owners. Okay.
Okay.
That own mortgage. They put on trade inside the bond market so that as rates go down, they won't get absolutely killed holding those mortgages like the big banks. Okay. So I've read this about 3 to 4 different times. I haven't got it straight in my head yet, but there was another great article yesterday in the Journal. And what they're saying is that we're right at the verge that all these big banks are going to have to put on another hedge because they went down so quick.
Sure.
And if that's the case, what it is it's almost like someone being shot the market that they're going to have to buy more 10 years.
Okay.
And they said if that waterfall comes in, it's going to be a
Sending
monster.
rates even lower?
Sending rates even lower.
Yeah.
Because what happens is that it's not that they're trying to keep delta neutral because they own so many mortgages.
Right, sure.
Yeah.
They have to take on risk positions to protect themselves.
Exactly. So it's like, oh man, that is about, never mind buyers that just are buying it for the yield. Then you get, okay, if you're trying to get delta neutral in a position that you already had, well, that's a monster because they're talking. Mortgages are in the trillions.
Sure. Oh, huge, right. It's just remarkable to see that, I mean, the horror show that was going on in 2008, right? We were still above 2%. People were paying 2% for their monny.
Right.
2012, I think that is the low down there, maybe. Or was it 2016? There it is.
I know, it's strange. It was
1.318.
Yeah.
I mean, that's what's remarkable. What was going on in the economy at that time?
And that was Brexit.
And we're 2016, yeah.
Right.
Yeah.
Stay right there, folks. Tommy and I come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now down 131, Nasdaq off 39, S&P's off 18.5, and someone just pulled the plug once again.
Don't look quick, man. It is going pretty quickly.
Let's go take a look at this baby. So
we're right down near the lows. ESHO maybe?
Yeah, thank you. Intraday. Yeah.
There we go. Just going below yesterday.
Broke out the lows.
Not good to break that low.
Now check this out. This is going to be. This looks to me like you almost got an ABC down. Boy, oh boy, if you do, where would I take this? This is interesting. Okay, so, well, if I could, 3303.
I don't
Oh my
know.
God! No, that'd be insane.
Well, I was almost going to say the other way. I was going to say, how do you start the A when you're in the middle of the
It's a truth.
open from Sunday
for sure.
to Monday? I think he either started where we ended last week or...
There's no doubt. If I take it that way, it's approximately 100 points, which gets you 3156. Well, that's doable.
I think it's even
That's only
more,
50
right?
50
'Cause
points
Are you
away.
going down to the B here?
Yeah.
And you're taking like here?
The gap. Yeah.
Okay.
Right.
Yeah.
Right.
Yeah.
3156.
Hey, we're dropping fast, man. We're about to be in a 3100 handle, which you would not have expected when we were up at 32. Let me just get before you 3258. I mean, you're talking about 60 S&P points from 2 in the morning.
Right.
Forget about yesterday.
Listen, this is
Yeah.
when you get volatility in the marketplace, folks, is not. And what you have to take into account for, is how high we are. I mean, this is, we went straight up for 6 months.
Yes. What does VIX list as an index?
Yeah.
Yeah, 2398.
You'll see that start creeping back up.
Yeah.
Yeah. Let's go take a look at some of the higher volume equities out. Oh, yeah, we got to go look at the gold market, man. This is
Wonder what's happening right now.
This is why I love gold, man. Gold is like out of its mind all the time, and
It's quite a day, quite a 5 days from
totally.
gold. Yeah.
And
Look at that run.
yesterday, okay, it almost makes the ABC up. Was 1705, but I'm going to do that again. So it's made 1690, I believe.
1691.
91,
yeah.
okay. So then when you did last night, which is so cool, man, you come all the way down, it's rejected the lower price, man. This could end up being another ABC up. So
Yeah, since the S&Ps have pulled back about 60 points, you've had the gold bounce $22 off of that low last night.
And look at how far it was off the highs, though.
Oh, I know.
61 down to 35.
91.
Thank you, 91 to 35.
Yeah, I said almost $60. That's what,
That's, if you're new to the gold market, folks, that's what the gold market does.
Seriously.
It's pretty intense.
Dow's down 200, man, and we do have a 31 handle on those S&Ps now.
Right, and guess what? By the time we're off the air, folks, which is going to be another 27 minutes.
Otherwise known as an eternity when the market's dropping this quick.
We just may break 1.31 in the 10-year. 14 ticks are up right now.
Okay. Yeah.
It's
Why not?
Yeah, pretty intense. Wow.
So how about getting into a little politics before? So you got a debate tonight, I believe, going on in South Carolina. South Carolina has their primary Saturday.
Okay.
And then we get Super Tuesday a week from today. And that is it March 2nd or 3rd? March 3rd. That's right. So March 3rd, I believe it's 14 states. Yeah, 14 states, Super Tuesday contest. That's usually when the field has a lot more clarity, at least.
There's no doubt.
And I was saying the other break, it's remarkable that the market, and maybe it is pricing in some level of risk that deems reasonable for this, but it's remarkable the field's completely wide open. I think there's 7 people on the stage tonight. Not all of those having a realistic shot, probably. And hopefully that field gets thinned. And
it's wild is that you think, like, when it first started, it seemed like Biden was the guy.
He definitely was.
And then Sanders took over everything.
Yeah.
I thought Bloomberg was going to do something. He got destroyed by Warren.
Bloomberg had the run until the debate. We'll see how he does on the second debate. The first one's got to be tough when you do have all the momentum. It's like you've never debated before, and you're the talk of the town, and everybody pounces on. He didn't quite handle it as many would have hoped, I'm sure. But yeah, so debate, and then just the fact that it's upon us, man, March 3rd, and we have the general election in November. And I wonder when we start to see that, if it gets priced, if the market thinks whoever comes out of the Democratic slot has a chance. I imagine that would definitely roil the markets.
Yeah, this whole thing.
Especially if it's Bernie.
Yeah, I'm telling you, man. Oh, you gotta love it.
Yeah.
So let's look at some of the higher volume equities out here. In fact, I'm going to go to Europe because I want to show Europe for a second. So you got Advanced Micros off $1. That's nothing heavy. You got Apple down $1. But Apple got hit yesterday. Apple was down a good 12 bucks.
Yeah, all those FANG stocks.
No, NVIDIA is the big one. Look at this. This is going to be serious business with NVIDIA because this stock is a psycho. I mean, You talk about volatility, folks. I mean, this is like about as intense as you can get. You know, the last high that NVIDIA made, you know, prior to this one, $292.
Okay.
And 2 months later, 3 months later, it was at 124.
Yeah.
Now, you know, I was talking about this earlier. You get a failure up here in February. If this closes under 292, you can make the case that that's the consolidation.
And is this on a monthly? Yeah.
Yes.
That's hard pressed to get up $30 in the next
I know.
Friday.
I
3
know.
days. Yeah.
And the bottom of that is 124.
Sure.
It's like, whoa, man.
Yeah, it was down there on a couple occasions. Even
Yeah.
look at that run from June of last year. It's
Yeah.
only February. 132 to over 300. Just like that, we're back to
That's how I
265.
like to trade, man.
Yeah.
I mean, it's serious business. It really is.
Yeah. Some of those FANG stocks, I wrote about, I saw that, I mean, it's $280 billion in market cap for the FANG stocks alone that they lost yesterday. The 5 biggest, you know, looking at, Facebook, Amazon, Google,
Yep. Microsoft.
Apple, I
Yeah.
believe.
So let's go look at Apple, because Apple was down like 12, 13 bucks yesterday. Yeah. So that's got that, you know, at least I suspect that'll get tested, which is what, that's 289 or 296.
And where does that bring us all the way back to? About December 26th.
Isn't that crazy when that
Yeah, it
happens?
is, right.
You know, these elevators down, folks, always something that is hard to comprehend, because when markets are going up, particularly like the NASDAQ and the NDX 100, sometimes you look at them going up, and then I look at where I think they might go. I said, there's no way it can go down.
Sure.
And then all of a sudden you're down there in 2 days.
Yeah.
You know, I mean, you know, the growth stocks, the way it works is that the growth stocks, when they're taking it south, well, they take it very far south, you know. And let's go over to Amazon for a second, because most times Amazon is always so hard to buy on a retracement.
Sure.
And
You're almost getting a 10% haircut from where it was trading at just last week.
yeah, and you know, we get a gap open at 1872. So that's a real danger point for Amazon, because anything under, well, right, look at this, right where we're at, 2002.27.
Yep.
You get into that gap, and you know the probability is that you're going to go fill it, and that is one monster move, man.
It's got to be tough when you go back into that gap. When I forget the exact numbers, but they crushed out of the park on their earnings on that day. Yeah.
Huge. And you know, Amazon, they just want to be the biggest of everything.
I think they came in at like $4 a share, and they were supposed to make $1.72. It was 41. They crushed it because everyone was worried about how much money they were going to make or lose by spending the money on single-day delivery.
Exactly.
They said, no, we can still bring it to the bottom line and spend over $1 billion.
Right. And now, folks, they're going to go bigger with their, you know, cashless grocery store.
Okay.
They have a couple of these in Seattle already. They're smaller ones, but now they're going to make that bigger. I mean, they can
Right near the
technology-wise,
headquarters. They're going to Seattle first, and I imagine 5 times the size of a typical Amazon Go.
He ain't
So
kidding
they're
around,
up
man.
in the ante.
Yeah. Stay right there, folks. Tommy and I come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's off 162. You get the NASDAQ off 53. S&Ps are off 21. And let's go take a look at...
How about Bitcoin? Bitcoin's been jumping around.
XBT.
Yeah, we're down about $200, down 188, 94.18. Not that long ago, we're above that 10,000 price point, right? But back under that run it had, we took a look, 6,400, went up almost 50%, more than 50% to 10,500 on the dot, 10,560 cents, and we're off a bit, like 94.15.
Yeah. And just in general, Bitcoin, it's like, okay, you know, that's not going away. I mean,
No.
I'm not going to have any Bitcoin, but the bottom line is it's definitely not going away. So.
And you can see how, if you're in countries that you really worry about, I mean, what about
for
if you're
sure.
in Africa or something,
Oh,
you
yeah.
worry about the country really gets hit, they have to, you know, cause a huge inflation to
Yep.
ruin their economy. All of a sudden your currency is devalued. That's the real worry, is whether it's the Middle East or Africa, they just don't have the infrastructure to have the type of quarantines, the type of care, the type of
there's no doubt.
separation. And if it ever hits there, it could really become a pandemic ripping through there, which,
Right.
yeah.
And so, you know, interesting. So the pandemic, the definition, my understanding of the pandemic is that so many different countries
Worldwide, I believe,
simultaneously,
is the phrase,
you know, getting it. You know, it seems like
close
we're
to
getting
that
there.
level. I
Exactly.
agree.
Yeah. Right. I don't think they want to put a name on it yet because
No.
the cases are still. Well, they're telling us they're small in these other countries, but you know, guess what?
Epidemic, I believe, more localized,
Yes,
maybe, and
right,
pandemic
right.
just more broad.
Right,
Yeah.
right.
Yeah.
So let's go take a look at the oil market out here. Oil has been absolutely getting smoked, and we're at $50.70 right now. We got 395,000 contracts. Big volume yesterday, so it's going to go after the lows. The real question is going to be like, can it hold the lows? ExxonMobil yesterday got smoked. This thing is going in a whole nother range now, and we take a look
Eric, 15-year low,
yeah, and
1.5.
it's like crazy, man. I mean, and it's been leading the oil market lower. So, you know, this is something you better pay attention to because it's
Now
like
you're under those levels. I mean, the next stop,
2005.
the next stop would be
There-
$29.
And look at
in
how it's sticking
2002.
out. And see, the top of that is 41, I think, right? Is
Where you
that-
looking here?
The $29 bar. Yeah, that you're looking
Oh,
at.
right
yeah.
here? Yes, 41.
Yeah. So
Yep.
you can, you know, when you look at the charts like this, folks, it's important. If you break one, go to the next volume one, man. That's kind of like where it wants to go.
And even if you make it to the high of 2000, you're talking about 47.70.
And 2000.
That's it. And you're talking about $8. That's another 15% down from where we're trading at right now.
Yeah.
What's the, can you go to description for them?
Yes.
They're going to have quite a dividend right now.
Oh, yeah.
6.25%.
Right.
Yeah.
Right.
Yeah.
Big move.
Yeah.
You know, no
Yeah.
doubt. So it's going to be quite a deal here. I mean, it's really. Oh yeah, that's what we want to do. Thanks, Ruby, because I wanted to go over to Europe because this is important. Like intraday in a day like today, folks. Okay, it's important to keep your eye on Europe.
Sure.
You know, because where Europe is going, unless we get some kind of a miracle at 2 or 3 o'clock in the afternoon, that's normally where we straighten out.
It's driving action. Sure.
Yeah, exactly. And you can see Europe gave it up. Now the DAX, this is serious business, man. Yeah, it gave up the full. Look at this. It's back to the breakout area from November 1st.
Yep.
That's serious business, man. You know, you do that, which well, we already did it. Let me pull this on a weekly. Yeah, look at this. Oh my God, this is a consolidation too. This is crazy. So, see if I can put. Yeah, this is lining up. The next move in the DAX could be like what, 12,656.
Yeah.
It's another $150 down, and you break that, and you know you can really.
Yeah, I mean everything had quite a run, right? Even since 2019. I mean the low down there at about 10,000, so we're still almost 30% above there. I was just putting it on a shorter time frame just to see if even, and you can even see, what is this, 10 minutes? So the last half hour, you just went from 12,968, so 160 points.
Right.
That's really a lot of this accelerating right when we are. That's, you know, I mean, you just went from 12,940, so you're talking about 110 points on a 12,000 point index. You're talking about a full percent there. Easy.
Yeah. So that's, you know, we're in this one world market, and we have been for quite some time.
Definitely. Definitely. I wanted to jump to oil. So what I did this morning, check out, it's still on there. So that oil move, how about that 38.2% to literally,
Look
you know, the penny. 52.02, it had that bounce.
Yeah.
And that's just coming from where we were last week. 54.66. You tanked down as the market, and that's when basically the market was at all-time highs.
Right.
You had the S&P at 33.97, I think, and you come down and you're back up. Just out of curiosity, let's see what. We didn't get any bounce. I was curious what kind of a bounce even you got on that news, but nothing on the S&Ps. But oil, just something to keep in mind as you're coming down those lows. And that was from 54. That was basically a $4 A to B. B to C, so you'd be going down to $48.
And it's showing how weak the oil market is. Now that, folks, okay, is in the context, it was already weak before the virus, okay? So I think it was weak prior to that because there's, you know, alternatives now and, you know, shale and the whole ball of wax, okay? And you can tell that, you know, oil is so, well, let's put it this way. The large integrated companies don't have confidence in it right now because what happened in Canada, they've been trying to get this oil sands project through for 12 years.
Okay.
And the deadline, evidently regulation-wise, was like a week from this Friday or something, right?
Okay.
Well, the company that's been trying to do it said this morning, it's Teak, said, we're not doing it, man.
Yeah.
Okay? Because after all that work, they said, no, we're not doing it because it's billions of dollars to do it, and they're not confident that, hey, you know, it's going to cost too much money to get it out. So there goes 9 to 12 years down the tubes.
And you can see you made it up to a high of, looks like, 54.66. Now taking, like, you know, if you ever, the 382 is 55, but man, you're talking about from about 65 to 49, just call it 15 or 16 bucks. Oh. That would bring you down to 40 bucks if you ever got to move like that.
See, that's intriguing because that's showing now how weak it really is, too. Because you brought that off the high, huh?
This is a daily now? Yeah. So this is a daily. This is the move that you were looking at in terms of from 65, call it 66, down to 49. And then the one that I had taken a look at that I deleted was this week, going from 54 down to 50. That was basically a 382 exactly bounced to like 52 bucks. So you'd have a $4 A to B.
And it would make sense. You know, one of the biggest things that, you know, diesel-wise, okay, you know, the airlines, and cruise ships. My God,
definitely.
Think about that. I mean, cruise ships use the worst fuel, okay, most of them. But bottom line, diesel, you know, is clean. Well, it's not clean fuel, but I'm just saying it's.
Oh no, it's dramatic. These cruise companies. I mean, look at Royal Caribbean, 113 down to 93, $20 haircut off that. What is Carnival? They had them in the report.
There it is. I know. Carnival Corporation.
CCL? No. We'll pull it.
It might be CCL.
Yes, there it is. So Carnival. 43 down to 36, let alone you put this back even further.
They're lucky it's only on 36.
That's what I was just, you put it back further and you really go from January 17th, 52 to 36. You're talking about 16. I mean, just 30+% for Carnival. But as you said, who's getting on a cruise anytime soon, man?
Nope.
I'm talking about months, if not a year,
I
year or
haven't
two.
ever gone on one, and I'm not going on one now.
Day. That might be it for a while.
Dow down 217, Nasdaq off 71, S&P's off 29. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down at 295, Nasdaq's off 99, S&Ps are off 37. Let's go. I got into this in my afternoon show yesterday, and you want to wrap your head around this a little, because what we hadn't got is you hadn't got a large tick reading, down tick reading. So when you're coming into lows, what does happen is that you need panic. Now, that's a nice downtick reading, minus 15.15. So what a downtick is this. You take all the stocks in the New York Stock Exchange, and that's saying that simultaneously when you take the ones that are on an uptick versus a downtick, 1,500 are going down with simultaneously, okay?
Yeah, I would say 1,500 more actually than going up.
So you
have
correct.
A net difference.
Yeah. Now, that's the first one, and that's good. That's saying that, okay, you got some panic that's going on here.
And we do, man. Dow's down 300.
Yeah.
We were up 200 coming into today.
And then if we take the trend, well, that's not a good number in the trend. And the trend, what should happen is that's to explode to like 2 point something. So, but you got the first indication on that tick that you're getting a sell down. and it has to do with the sell down simultaneously. But on top of that, what you do need for a bottom, you need then the rejection of lower price, then you need some kind of a bump up, and that trend's got to get higher too.
Yeah.
You know,
I mean, you can see now where we're at, right? That's 32.01. This is going to catch up a bit. We're sitting at 31.90, and the low, excuse me, the low I have from January 8th is 31.81.
Yeah, it's taking back the year.
Yes, definitely.
2 days.
Not to mention, you're going back to now. Right on there, December 17th, we were trading at 31.92, which is right where we're at, December 17th.
No doubt.
Yeah.
No doubt. So, right? So you're going to have defined risk coming up at you, folks, okay?
And where are we sitting in the rates? 1.325. We're within a percentage.
It's going to be there. It's going to be there today, folks.
Refinance. I'm looking forward to that Bud segment Friday at 3:15.
Totally. Stay right there, folks. Think or Swim, Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, Bill.
Thanks, man.
Go get him, folks.